The biggest money move of the decade is happening right now. Over $7 trillion, yes, trillion with a T, is about to shift across global markets. And where this money flows will create massive winners and massive losers. If you position yourself correctly, you could ride the wave to incredible gains. But if you're on the wrong side, you could watch your portfolio take a serious hit. Today, I'm breaking down exactly where this money is going, why it's happening, and most importantly, how you can position yourself before the wave hits. This is one of those rare moments where paying attention now could make a huge difference in your financial future. Hey everyone, welcome back to KP Money Talks, where we simplify personal finance in Canada and help you make smarter money moves. Over the past 2 years, investors have been playing it safe, parking trillions of dollars in money market funds, short-term bonds, and high-interest savings accounts. Why? Because interest rates have been at their highest levels in over 20 years. Earning 5% risk-free sounded a lot better than riding out a volatile stock market or an unpredictable housing market. But here's the shift. The Federal Reserve is expected to start cutting rates this September, and that changes everything. When interest rates drop, those safe investments start paying less, and investors are forced to chase higher returns. The result? A massive $7 trillion flood of money that will move quickly into stocks, bonds, real estate, and other assets. And when money moves at this scale, prices can skyrocket or crash almost overnight. Now, you might be thinking, we've seen big market shifts before. What makes this one so special? Great question. We've had major events in the past. The dot-com bubble in the late 90s, the housing boom of the mid-2000s, the crypto craze of the last decade. But this time is different for three reasons. First, the scale. We're talking trillions of dollars, not billions. This isn't just retail investors, it's institutions, governments, and global capital flows moving simultaneously. Second, the speed. In the past, portfolio shifts happened over years. Today, thanks to technology and automation, entire portfolios can be restructured in weeks or even days. Third, the interconnectedness. These trends don't exist in silos anymore. A move in one area, if you'd like AI or clean energy, creates ripple effects across multiple sectors, currencies, and even countries. So where exactly is this money going? It's not random. It's moving into four massive, interconnected trends that will define the next decade of investing. 1. The AI infrastructure boom, building the digital backbone of the future. 2. The clean energy revolution, driven by both profit and necessity. 3. The digital currency transformation, changing how money itself moves. 4. The private market shift, where the big money is quietly moving off Wall Street. Let's break each of these down. Trend 1. The AI infrastructure. Boom! When most people think of AI investing, they immediately think of companies like NVIDIA, Microsoft, or OpenAI. But here's what most investors miss. AI isn't just about software and chips. It's about infrastructure. Think of AI like a new kind of city being built from scratch. You don't just need buildings, you need roads, power grids, water systems, and utilities. AI requires massive data centers to house the servers, electricity grids to power them, cooling systems to prevent overheating, fiber optic networks to move data at lightning speed. And all of that costs money, big money. In 2025 alone, Amazon, Microsoft, Google, and Meta are expected to spend $364 billion on AI infrastructure. Every dollar spent flows into a web of opportunities, from real estate developers who build data centers to utilities upgrading their power systems. And here's something fascinating. These AI hubs are popping up in places like Northern Virginia, Texas, and Ohio, creating ripple effects for housing markets, local businesses, and job growth. This isn't just a tech play, it's an entire ecosystem, and the smart money is already positioning itself. Trend 2. The clean energy revolution. The AI boom has a hidden side effect: massive energy consumption. Data centers are power hungry, and the companies building them are under intense pressure to power them with clean energy. Here's the scale of what's happening. Global energy investment in 2025 will reach $3.3 trillion. And for the first time in history, clean energy will get twice the investment of fossil fuels. This isn't just about saving the planet, it's about profitability. For example, a pension fund in California built a massive solar farm. They produce electricity for 2 cents per kilowatt hour and sell it for 5 cents, locked in with a 25-year contract. That's a guaranteed 8% annual return, backed by a utility company. Think about that. That's higher than most government bonds, and it's guaranteed for decades. Where you can invest, safe plays, broad clean energy. ETFs are utility companies, growth plays, solar, wind, and EV companies with proven track record. Speculative bets, lithium, battery tech, and startups working on next-gen storage solutions. This clean energy wave isn't optional. It's being fueled by regulation, consumer demand, and sheer necessity.
Trend 3, the digital currency transformation. Now, let's talk about money itself, because how money moves is also evolving. Digital currencies are no longer just about Bitcoin hype or wild speculation. The real action is in stablecoins and digital payment infrastructure. Stablecoins, which are tied to the US dollar, have grown to a market cap of nearly $300 billion, up 63% year over year. Why? Because businesses are actually using them for real transactions. I recently spoke with a manufacturer who sells goods internationally. Traditional wire transfers cost him $100 and took 3 days. Using stablecoins, he now pays $5 and it clears in minutes. Even major players like Visa, PayPal, and JP Morgan are rolling out digital currency initiatives. 3 ways you can play this trend. High risk, high reward, directly owning digital currencies like Bitcoin or stablecoins. Medium risk, investing in the infrastructure, exchanges, processors, and blockchain service providers. Low risk, buying shares in traditional financial firms, adapting to digital payments.
Trend 4, the private market shift. Finally, let's talk about a shift that's been happening quietly behind the scenes. For decades, retail investors like us primarily invested in public markets, stocks, bonds, ETFs. But today, institutional investors like the big players, are moving huge amounts of money into private markets. In 1990, institutional portfolios were just 5% private investments. Today, that number has jumped to 40% or more. What kinds of assets are we talking about? Infrastructure like toll roads, energy grids, and airports? Specialized real estate like data centers and logistics hubs? Private credit, direct lending to companies' growth equity, investing in companies before they go public. Here's the good news. Thanks to platforms like Fundrise and Yield Street, regular investors now have access to these once exclusive opportunities, often with minimums as low as $10,000. Here's the big insight most people miss. These 4 trends aren't separate. They're connected. AI data centers need clean energy to operate sustainably. Clean energy projects often rely on private market funding to get built. And those private markets are increasingly using digital currencies to move money faster and cheaper. It's a self-reinforcing loop of growth, with each trend feeding the others. If you can spot these connections, you're not just investing in one sector. You're investing in entire ecosystems. The $7 trillion shift is happening with or without you. The companies that will dominate the 2030s and beyond are being built right now. Your job isn't to predict every move perfectly. It's to position yourself intelligently, diversify, and ride the wave as it unfolds. If you start small, think long-term, and follow where the smart money is going, you can set yourself up for incredible opportunities over the next decade. Thanks for watching. If you found this helpful, hit subscribe, give this video a like, and let me know in the comments which of these trends you're most excited about.